So Tesla's just reported Q2 financial results, and once again, surprise, surprise, they absolutely crushed it despite insane challenges during the quarter, including the ridiculous, insane, fascist, futile, inhumane shutdowns in Shanghai, losing about 100,000 vehicles of production, the concurrent ramping of 2 brand new factories with a load of new technologies, insane supply chain challenges, logistics issues, and increasing material costs, and the crushing weight of the competition. Okay, that last point was a lie. There is still no competition. First, we're going to look at some quick highlights from the earnings report, then we'll go through highlights from Tesla's earnings call. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment theme merch in the merch store, so check out the links in the pinned comment below, and thanks for your support. So a couple of quick highlights from the earnings report. Operating cash flow of $621 million in Q2, an increase of almost $1 billion, $800 million increase in cash and cash equivalents. Tesla now has cash and cash equivalents of approaching $20 billion. Not bad, especially for a company that was going bankrupt only a few years ago. Remember? And I want to emphasize, this is despite the insane shutdowns in Shanghai. Tesla still, in terms of profitability, did $2.5 billion GAAP operating income. And amazingly, a 14.6% operating margin in Q2. Tesla's GAAP automotive margin, 27.9%. And a few key highlights here in terms of operations. More than 1,000 vehicles produced in a single week at Giga Berlin. Great start. And Tesla reached their highest solar deployment in over 4 years. Although starting from an extremely low base, this isn't necessarily an astonishing accomplishment. Over to the summary here, quote, "We achieved an operating margin among the highest in the industry of 14.6%. And again, I want to reiterate, this is despite Tesla getting completely f***ed in Shanghai and losing 100,000 vehicles, meaning all the overheads and the fixed cost associated with each vehicle sold, much higher than normal, and still industry-leading operating margin. What the actual. Tesla also ended the quarter with the highest vehicle production month in their history. And one final highlight here in the summary, customer interest in our storage products remains strong and well above our production rate. So not only is Tesla production constrained on vehicles, but also on storage. Good problem to have. Despite the insane shutdown in Shanghai, Tesla still managed to grow automotive revenues 43% year over year. Incredible. And out of interest, solar deployments in megawatt hours in Q2, 106. Up 25% year over year. Storage deployed down a little bit year over year, but again, Tesla is supply constrained here, so what are you going to do? You can't sell products that you can't make. And Tesla continues to grow their supercharging network, supercharger stations increasing 34% year over year. One of the most important pages in the entire earnings report here, Tesla's installed annual capacity. If you suck at math, Tesla's already around 2 million units of annual production capacity today. And note, the greater than 750,000, greater than 250,000, greater than 250,000. This is called sandbagging, big time. Of course, many of the dullards on Wall Street will, oh, okay, so it must be 750,000. No, it's over that, significantly over that, but this is how Tesla sandbags. If you can't read between the lines, you might miss this stuff. This is one page to pay very close attention to in future earnings reports as well. One of my favorite charts in the entire report here, Tesla's market share of vehicles by region. US and Canada in blue, Europe in red, China in green. This is exponential growth. Doesn't look like a huge amount now, but the trend is pretty clear. This is vehicle sales globally. This isn't electric vehicles, this is vehicles. If we progress these curves into the future, things get very ridiculous very fast. A juicy quote here, autopilot and full self-driving. As of the end of Q2 2022, over 100,000 Tesla drivers in North America had access to FSD Beta. Talk about a data collection flywheel. But on vehicle software, this is fascinating. Vehicles with adaptive suspension in North America can now automatically adjust to a more comfortable ride height before encountering a section of rough road, informed by continuously updated data collected by our fleet. The implications of this are stunning. In fact, I may make an entire video dedicated to this in the future. And on battery powertrain and manufacturing, remember Elon's quote, "The best part is no part, the best process, no process." Quote, "Thanks to large castings and parts consolidation, the robot count in our body shops in new factories dropped by over 70% per unit of capacity compared to our first iteration of Model 3 body shop." Oh, is that all? You deleted 70% of the robots. I guess Elon was serious when he said the best part is no part. That includes the best robot is no robot. It's definitely worth letting the implications of this chart sink in. We're looking at cumulative miles driven with FSD beta. This also is exponential growth, and again, the implications are kind of stunning. And as I say, a picture is worth 1,000 words. Check this one out. Body shop robot count per unit of manufacturing capacity. Model S in Fremont, Tesla's first production vehicle at volume. Next, we have Model 3 in Fremont. Massive reduction. I mean, look at that. Tesla went from Model S to Model 3 and reduced about 50% of the body shop robot count per unit of manufacturing capacity. Then they did the same fucking thing from 3 to Y. And yeah, spoiler alert, you can see the trend in Model Y Austin and Model Y Berlin. This chart literally shows Tesla deleting parts and processes. As we can see here, solar deployments super lumpy, but Tesla's slaying it in Q2 2022, but keep in mind, this is super lumpy, and because it's starting from a fairly small base, I wouldn't read into this too much. Still unclear what things look like in the coming quarters and years. Obviously, longer term growth is going to be phenomenal, but how soon we start to see that ramp up consistently, anyone's guess. And as I predicted in yesterday's video, literally to the word, Tesla reiterating, quote, "We plan to grow our manufacturing capacity as quickly as possible. Over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries." And now onto my favorite charts in the entire report, the trailing 12-month metrics. On the left here, we're looking at vehicle deliveries in millions of units. This also exponential growth. And again, I encourage you, use your brain, even if it hurts a little bit, and imagine, if this continues, what do future deliveries look like? Funnily enough, operating cash flow and free cash flow are very closely correlated with Tesla's delivery growth. And yep, surprise, surprise, net income and adjusted EBITDA also correlated very closely with Tesla's deliveries. This is a very strong sign. As they say, the trend is your friend. It's pretty clear which direction Tesla's heading. So now let's run through the earnings call highlights. From Elon's opening remarks, Q2 was unique due to prolonged Shanghai shutdowns. By the way, I've got to give credit to Elon and the team at Tesla for delicately dealing with these shutdowns. They're absolutely fucking insane. They're inhumane, they're fascist, futile, idiotic, and embarrassingly so. But of course, Tesla kind of needs to dance around the issue on, the shutdowns. They sucked, but they're not actually commenting on the idiocy of the shutdowns themselves, just how much the shutdowns actually fucked the company. I, of course, can't hold back. June was a record month for production at both Fremont and Shanghai, and if you want to be technical, also Austin and Berlin. Speaking of, Berlin has now ramped to over 1,000 vehicles per week in the month of June, and Texas, the Austin Gigafactory, is expected to exceed 1,000 vehicles per week in the next few months. On battery cells, currently the 2170 cells are being used, and Tesla has enough supply locked in from their existing suppliers to produce all vehicles they aim to produce this year. However, in 2023, for Tesla to continue hitting their goals, they will need to successfully ramp up the 4680 cells. So this is a risk Tesla investors need to be aware of in the short term. If there's prolonged delays in ramping up 4680s, Tesla will not be able to achieve the goals they're aiming for over the short term. When Elon also mentioned that already 35 million miles have been driven with FSD beta. And Elon continued, this might be more than all other companies combined just from FSD beta. But remember, the competition is coming, especially in autonomy. Elon also pointed out that 5 to 6 years ago, Tesla set a goal of becoming the best manufacturer in the world and pointed out that this would be their strongest competitive advantage, and Tesla is clearly living up to this. Example, the fact that Tesla reduced body welding robot count by 70% in Berlin, which means they have about a 3 times smaller body shop than a normal automotive manufacturer. And keep in mind, when you delete parts and processes, you're not just needing to spend less money on robots and less time putting things together. In addition, you literally save factory footprint. This is something a lot of investors don't seem to appreciate. Today, Fremont's capacity, give or take, around 650,000 vehicles per year. At the end of this decade, this will be about 1 million vehicles per year. And people say, Stephen, you're a moron. That's not possible. How dumb are you? And I say, if Tesla keeps deleting parts and processes, the same factory footprint can increase its output. This is an example of that. If you delete 70% of the robots in body welding, you end up with 1/3 the factory footprint required for body welding. Tesla's going to keep deleting parts and processes in all their factories indefinitely. And a great quote here, in terms of simplicity, deleting parts and processes, manufacturing efficiencies. Quote, this journey's not over. We'll bring another level of improvement and simplicity with Cybertruck. If only someone had a thought to make a video about Cybertruck being engineering genius back when it was unveiled in 2019, people might have already seen this coming. On to vehicle safety, and this is mind-blowing. I won't get too down in the details here, but Tesla is now using their vision system, their artificial intelligence, to predict if a collision is imminent and then to tension the seatbelts ahead of time. This, of course, reducing the probability of injury in collision. And as Elon alluded to on the Joe Rogan podcast maybe 24 months ago, Tesla is also able to adjust airbag deployment ahead of predicted collisions. No other automotive manufacturer is or can do this, at least today. But remember, the competition is coming. And the key takeaways: Q2 exits at the strongest rate of production ever. Cybertruck production is expected in mid-2023. Quote, "It might be our best product ever." And FSD Beta is on track for release to all North American customers later in 2022, and hopefully in Europe and other parts of the world, pending regulatory approval soon after. We're also told that AI Day 2 will be amazing. I'll bet. Later on the call, Elon also suggested that people may be surprised at how far along Tesla are with what they show on AI Day. Now, is that a hint about the Tesla humanoid robot? Time will tell. We also got further clarification. Tesla sold around 3/4 of their Bitcoin holdings this quarter, and the reason was due to the uncertainty around the Shanghai shutdowns. Tesla sold Bitcoin to strengthen their financial position. Elon adding that we are open to acquiring Bitcoin soon, and we have not sold any of our Dogecoin. And for the record, a few investors I think are misinterpreting. Wait, Tesla never told us they owned Dogecoin? To be clear, Tesla's been accepting payments in Dogecoin for some of their merch. I presume this is where most of their Dogecoin holdings come from. They probably have a little bit as well for liquidity. I don't know for sure, but I don't think this was Tesla low-key mentioning, oh yeah, by the way, we've got a couple of $1 billion of Dogecoin we didn't tell anyone about. But you never know. That being said, I think Elon has plenty of Dogecoin. And now on to Zach's opening remarks. Tesla made substantial progress in nearly every area of the business. Fremont and Shanghai reached new production records. Gap automotive margin declined temporarily due to the Shanghai shutdown and ramp inefficiencies at new factories. Tesla's storage business is still limited by supply. Hopefully, Tesla can alleviate the supply bottleneck soon. At the moment, Tesla is prioritizing battery cells into vehicles over storage products. And this is key, quote, "We are positioned for a record-breaking second half of the year. Investors be warned." As I've said, I'm still buying Tesla stock hand over fist. In fact, full disclosure, bought another 45 shares overnight. If you're wondering where the fuck is this money coming from, I've posted about this on Patreon under my videos about my money printer. If you're not already a member on Patreon, click the card in the corner or the link in the pinned comment to join. Zach also clarified that the Austin and Berlin factory ramps will continue to weigh on margins for the rest of the year. I mean, duh, but hey, sometimes you've got to point out the obvious. And despite losing more builds than expected in Q2, to the tune of about 100,000, thanks again Shanghai, you fuckwits, 50% production growth is still possible. Now onto the retail investor questions. Somebody asked, how will Tesla stay ahead of Chinese EV makers? Elon's reply, savage but accurate. Quote, "Right now the best Chinese EV manufacturer is Tesla." He's right. But Tesla has great respect for Chinese EV makers and thinks they will do well, and any company not as competitive as them, the Chinese EV makers, will suffer a decline. And just to clarify and expand on this a little further, I personally believe that this decline for most automotive manufacturers will go all the way to bankrupt. And on Elon's comments previously that ideally Tesla wants to lower prices when inflation cools down, Tesla pointing out they still have quite long wait times, 6 to 12 months from order to delivery in some cases. Absolutely insane. And because of this, Tesla has to anticipate probable inflation rate ahead of time. If they don't, customers will be paying a lot less than they should be for vehicles given the increasing cost over the time between when they order and when they take delivery. And Elon's best guess is that he thinks inflation will decline later this year, adding, "Economic prognostication is fraught with error." Sure is. On material costs, one example given was that the lithium price has shot up from $11 a kilogram to $80 a kilogram. Absolutely insane, but not everything is that bad. Quote, "Most commodities we're seeing a downtrend later this year or early next year." This is good. And once again, Elon urges entrepreneurs to enter the lithium refining business, emphasizing that there are literally software margins in lithium refining at the moment, adding, "You can't lose. It's a license to print money." And regarding Bitcoin as an asset long term, cryptocurrency is a sideshow to a sideshow. Crypto is not something we think about a lot. The focus is on the mission. One of my favorite moments in the entire earnings call was when asked about 4680 cost improvements. This is definitely one for the engineering and physics nerds. Tesla pointed out that the structural pack's dual use of cells as structure and energy storage from a physics standpoint is obviously the superior architecture. It's already more efficient than the old way of, quote, "the car basically carrying a battery pack as cargo, but will get much better with refinement." And here's where things get super juicy and also super nerdy. Tesla described the idea of a platonic ideal of the perfect product with atoms in the perfect position. How many times have you guys and girls heard me say on this channel, going down to the atoms and then going from there, first principles, physics thinking? This is physics thinking in action. They expanded. You asymptotically approach this platonic ideal over time, but you have to figure out what is the platonic ideal. Again, I want to emphasize, Tesla is literally thinking about the perfect way of arranging atoms in a product they're manufacturing. When was the last time you heard anyone at any other company that manufactures anything ever talking about atoms being perfectly arranged? A platonic ideal. More importantly, when was the last time you saw a company talking about this and then actually striving to achieve this platonic ideal? And Tesla with a savage low-key flex here, describing the path to reaching this platonic ideal, the perfectly arranged atoms in a product. And in reaching this ideal, you might need to, invent new alloys never before seen on the planet, do cutting edge material science, whatever it takes. And Tesla also mentioning, in case anyone was unaware on the call, they have literally invented new materials, new alloys, never before seen on the planet, maybe never in the universe, just to reach this platonic ideal. And no, they're not even close yet, but they are making massive progress. And some more fascinating insights on Tesla's improving efficiencies. The version 1 front casting for Model Y versus the current front casting for Model Y, Tesla's already managed to save 5 kilograms of mass just in casting improvements. And if you're not an engineering nerd, the less mass, the less heavy, the less energy required to move it. This is why fat people get out of breath walking up and down stairs or basically doing anything. You've got a huge amount of mass to move around. It requires a lot more energy. If you delete mass, you require less energy, meaning less battery cells required for the same amount of range, etc. Tesla also emphasized that there are still many opportunities to reduce casting mass and extend casting to include more parts. I am hoping one day Tesla can solve an entire full body casting. Might take a while, but the ideal, honestly, if you think about this really simply, wouldn't it be amazing if Tesla could make the entire body of the car, front, rear, and structural battery pack in a single cast piece? This will require some insane material science, incredible engineering, but it is possible in theory, I think. Regarding full self-driving progress and Andrej Karpathy's recent departure, Elon Musk trolled everyone on the earnings call. The hilarity is that some people probably actually interpreted this as a serious statement initially. I'm talking about some of the boring, boneheaded Wall Street stock analysts. Elon says, since Andrej was writing all the code himself, full self-driving progress has come to a grinding halt. Not. A key insight, however, Elon adding that Tesla has a team of just 120 people in the software AI group that are extremely talented. Now, I always love numbers, especially numbers that have never before been revealed. It is mind-blowing to see just 120 people are involved in Tesla's software AI group. This doesn't include data labels and so on. These are just the people working on Tesla AI, but 120 people and the results they've accomplished already? Holy fucking shit. If this were Twitter, they'd need 120,000 people to produce a tenth of the result. Actually, they'd probably need about 1.2 million people. Elon also said for the 400th year in a row, quote, "It does seem like we are converging on solving full self-driving this year." Elon acknowledging that he said this many times in the past and everyone goes, "Ah, yeah, sure, Elon," as if you always say that. Well, he actually really believes that this time it's going to happen. Even I remain a skeptic. I still think we're looking at 2024 before the first paid robotaxi fare in a Tesla vehicle happens anywhere on planet Earth. I'd love to be wrong. And to be clear, solving FSD beta isn't the same as the first robotaxi fare, but I think the gap between these two milestones will be fairly small. As Elon describes it, solving FSD beta means safer than the average human driver, not capable of doing robotaxi fares, although they're pretty similar. We also got some key insights on the 4680 cell ramps. Tesla continues to make progress and the Cato Road facility output is growing at 35% month over month. This is pretty nuts. And regarding the battery ramps, Texas aims to exceed Cato Road output before the end of this year. We also learned that Tesla procures about 1,600 unique pieces of silicon from suppliers. More on this a bit later. We also learned, unsurprisingly, that Q2 was the largest increase yet in terms of inflation and commodity cost increases. And Tesla again reiterating they are hopeful to begin Cybertruck deliveries in mid-2023. From my point of view, I'll be really impressed if they can pull it off before the end of 2023. On to the analyst questions. Pierre Ferragu asking about the structural battery pack and progress versus Tesla's battery day goals. And asked, did Tesla software limit the 4680 cell Model Ys currently being built in Austin, aka is Tesla sandbagging? And we learned a lot in response to this. Tesla pointing out that their priority was simplicity and scale during the initial 4680 ramp, not putting all the bells and whistles in from day one. But as progress continues, quote, "We are certainly planning to layer in newer material technologies and range improvements." But Tesla is not sandbagging now, e.g. software limiting range. At least they kind of said they're not. We also learned that Tesla made a major advance in the dry electrode process this quarter. If you guys recall Battery Investor Day, the dry electrode process is a huge innovation in battery cell production and also one of the most difficult bottlenecks in ramping up production. This is big news. Elon also reiterated that Tesla cell production is in addition to what suppliers can do, and Tesla wants all suppliers to increase output to grow as much and fast as possible. Goes without saying, but it was said, the fundamental limiter to transitioning to sustainability is how fast can you scale battery production. Looking out a few years into the future, Tesla said that they do see constraints in refining of the materials necessary for lithium-ion batteries. Not today, not tomorrow, but in the future, this is going to be a major constraint. And a really interesting insight here. On more concerns about the future, Tesla does have some concerns about the machinery required to refine lithium and also cathode materials. It was interesting that the term machinery was specifically used. Of course, it's definitely not possible that Tesla is ever going to do anything at all, whatsoever. Not even get slightly involved in developing or refining machinery required for refining lithium and cathode materials, right? Elon also casually mentioned long-range aircraft. Tesla also confirmed that they're already constructing their cathode building in Austin and working on lithium refinement. And a key quote, again, this goes without saying, we should all know this by now, but if not, just to be clear, quote, if our suppliers don't solve these problems, then we will. This applies to every problem ever faced by Tesla. If others aren't going to solve the problem, Tesla will just do it themselves, even if they don't want to. Tesla again reiterating, quote, right now, our problem is production. Once again, an analyst wanting to know about demand. Zach Kirkhorn pointing out, we are not seeing a material impact on demand due to the macro environment. We have a very long runway, very long lead times. And I know this will fall on deaf ears and empty heads, but dear Wall Street stock analysts, can you fuckers please stop asking Tesla about demand on earnings call and wasting everyone's goddamn time? Just stop. When the wait times are in excess of 6 to 12 months in most regions for most trims, don't waste your breath. When Tesla's delivery times are within a few weeks of ordering, that's the time to start asking those questions. Regarding the price increases on Tesla vehicles across the board over the last 18 months, Elon emphasized that there is a big difference between value for money and affordability. At some point, price increases get to a certain level, customers can no longer afford your products. At that point, it doesn't matter how compelling they are. If people can't afford them, they can't buy them, and if they can't buy them, they don't buy them, and if they don't buy them, you got a problem. A great quote from Elon here. We've raised our prices quite a few times, frankly, at embarrassing levels, and I totally understand where he's coming from. In fact, I may have used the term embarrassing as well. Tesla isn't raising prices because they want to, or they want to fuck customers, or they're trying to make insane profits, although this is a side effect of just being great at manufacturing. They're raising prices to ensure wait times don't blow out anymore and to line up with increasing material costs. Tesla's hand is being forced. Lucky for them, their products are compelling enough and offer enough value that consumers are willing to pay 20, 30, 40% almost above what they were selling for 18 months ago and still maintain ludicrous wait times. However, if you're not Tesla and your products aren't that compelling, in fact, some of them are steaming piles of feces, you don't have the luxury of being able to jack up your prices 10, 15, 20, 25, 30, 35% over an 18-month period. Well, you can jack up the prices, but customers won't buy your vehicles, and if you've got a higher price but no one's buying them, the price increase doesn't really help you, does it? Quote, I am hopeful at some point we can reduce the prices quite a bit. Another very compelling insight, quote, Tesla has a good chance of exiting 2022 at 40,000 vehicles per week. Again, if you suck at math, that's a run rate of over 2 million vehicles per year. And if you're a Wall Street analyst, just to be really clear, you've got to sometimes talk to the lowest common denominator in the room. If Tesla exits 2022 at a run rate of over 40,000 vehicles produced per week, that doesn't mean they're going to produce 40,000 vehicles per week every single week in 2023, because in addition to their existing capacity and facilities, every one of their factories is expanding. Some massively, some just starting to ramp up, others like Fremont eking out incremental capacity increases. But the point is, Tesla will exit 2023 with a substantially higher rate of production. Therefore, for the full year, 2023, Tesla is going to do well, and I mean well in excess of 2 million vehicles produced. But don't tell the Wall Street folks that, because at the moment, the consensus expectations and reality, there's a huge mismatch, and I'd rather that mismatch remain for as long as possible so I can keep loading up on Tesla stock with every spare cent. Elon reiterated for the trillionth time, quote, Tesla does not have a demand problem. Tesla has a production problem. Another quote, you can't look at the backlog and infer anything about demand, and this is an important point. Tesla elaborated on this point. We don't want a long backlog. We want lead times to reduce. And Tesla pointed out they're doing everything they can behind the scenes to reduce wait times. For example, massively increasing prices across the board, prioritizing deliveries of higher trim, more expensive vehicles. As in, you don't want to wait as long? Fine, just buy the performance model or throw in the full self-driving software package. And I really want to underscore this because some people might get a little bit confused here. As we know, Tesla's wait times are absolutely fucking absurd. But this is in spite of Tesla doing everything they possibly can to reduce the wait times, yet they're still 3, 6, 9, 12 plus months. And this is why Tesla says you can't really look at the backlog and infer anything about demand. If Tesla hadn't been tweaking things behind the scenes, Tesla's wait times today could be literally 3, 4 plus years to take delivery of a vehicle. And no one's gonna, well, not no one, but very few customers are willing to wait that long for a product that's already on sale in the marketplace between ordering and taking delivery. People are just generally way too impatient. Quote, because we see daily orders from around the world for our cars, it is like a mood barometer for the people's confidence in the economy, but one can't read too much into it as things can vary a great deal from one day to the next. Consumer sentiment is all over the map, manic depressive to be frank. We have so much excess demand that it is not an issue for us, and here's the kicker, but it may be for other companies. An elegant way of pointing out the obvious fact that most automotive manufacturers are absolutely Elon also added, quote, if there's only good news, I won't be on the earnings call. So clearly there's been a lot of bad news, global supply chain challenges, factory shutdowns, and so on. I guess as a Tesla stock investor, we should all probably be hoping that Elon never appears on another Tesla earnings call, ever, although that ain't gonna happen. And asked about Elon's role at Tesla, the company, his commitment and time spent in the future, quote, I'll work at Tesla as long as I can usefully advance the cause of sustainability and, importantly, autonomy. Another of my favorite comments on the entire call, AI Day will have some exciting news and will be further ahead than most people think. Let the speculation begin. Regarding chips, quote, we don't currently intend to make chips ourselves, but we have been working closely with chip and component suppliers. Another interesting tidbit, quote, quite frankly, the chip shortage serves as a forcing function to reduce the number of chips in the car. It turns out we had more chips than we needed. And finally, Tesla's goal over time is to integrate more functions into fewer chips, similar to what's happening with smartphones today. The best part, the best chip is no chip. So to quickly recap Tesla's Q2 2022, despite getting fucked without consent from just about every direction you can possibly imagine, simultaneously, supply chain challenges, material costs, logistics issues, factory shutdowns, and so on, Tesla's still absolutely slayed it. They've ended Q2 at record volume from every factory, all 4 of them, FSD Beta making massive progress. Tesla crushed Wall Street expectations despite the difficulties this quarter. Tesla continues to pull further into their already unassailable lead on everything that matters, including manufacturing, producing EVs at scale profitably that customers are willing to buy at a premium and wait a very long time to take delivery of. Elon still remains confident FSD will be solved this year, Cybertruck deliveries mid next year. AI Day is going to blow people away. In fact, I think I can sum this earnings call up in one word: winning. So hope you guys and girls have enjoyed this video, and finally don't forget to join Patreon with the card in the corner or the link in the pinned comment. Submissions are still open for the latest exclusive Q&A. Submissions close very soon, so get your questions in now, and all Patreon supporters at all supporter levels get instant up-to-date access to my Tesla stock price targets out over the next decade, plus loads of exclusive videos, well over 100, plenty of other perks as well. So I'll see you over on Patreon. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.